In 1849, a guy by the name of Sam Brennan ran through San Francisco screaming that there was gold in the American River. He did not, however, run off to dig. He quietly bought every shovel, pan, and pickaxe in the territory first. By the time the other prospectors arrived, he owned the only store selling the tools they needed. He became the richest man in California without ever kneeling in a single creek looking for gold. Most of the men who actually dug for gold went home broke. And today I'm going to be giving you those picks, shovels, and pans stocks for the AI gold rush. The companies that get paid no matter which AI app wins, ranked across the entire stack from silicon chip all the way down to the power plant. So here's the frame. Every AI model, every chatbot, every app has to be run on the same physical foundation. Chips to think with, equipment to power and cool those chips, clouds to rent them out, and underneath it all, gigawatts of electricity is the foundation. As Nvidia's CEO Jensen Huang said in May 2026, we are living through the largest infrastructure expansion in human history. Stop betting on which prospector wins and start owning the toll road that they all drive down.
Welcome to the game, it's the Instant Stocks by Mikhail Kuhar.
And if you're new to this channel or you've been here a little while, my name is Mikhail, and one of my highest values in life is freedom. It's why I've partnered with X10. And over the last 4.5 years, we have built an AutoPilot software, which essentially is 100% hands-off for you to trade. It allows our team of traders to send a signal through our software directly to your Interactive Brokers account. One of the best things is you never have to send us any of the money, and we just launched V3. What exactly is V3? V3 is the combination of AI and our trade history, millions and millions of data points of potential trades, trades we've taken, winners we've cut, losers we've cut, stop losses we've implemented, and trimming winners as they go. And it's given us an edge on top of what we've already done. And the reason we've done this is I'm a big believer that you cannot have true freedom in life unless you have time and money. If you have money, you don't have time, you don't have freedom. If you have time, you don't have money, you don't have freedom. And I understand everyone watching this, 90% of the guys I speak to that come through on here do not trade full time. You have a job, you have a business, you have a family, you have responsibilities, and with those responsibilities takes capacity. You can't be staring at a screen all day, reading every single article, analyzing every single chart that comes out. And sometimes a lot of us just don't want to do that. I know I don't want to spend my life in front of a screen. So I let the pros do the work for me. I'm 80% in long-term conviction trades. One of those big ones is HIMS. That's one of my big positions, and 20% in short-term trades. And we aim every single month to get anywhere from 8 to 15% and even more return for our clients through our software. And no matter the size of your portfolio, as long as you have 10,000 US to allocate inside of your portfolio to make sure you have enough to catch the trades, because we have a 5% stake per trade as purely risk management on the inside, all the way up till we got clients with $500,000, $600,000, $700,000 in their accounts. And you can also see here, these are the results from some of our clients in May and the last few weeks. Some of our picks have allowed clients to buy houses, return thousands and thousands of dollars every single week, and some of them just to supplement an income to cover their rent or any other expenses, or to double down and increase their portfolio so they can compound the results quicker. So if you want to find out more, click the link below. And if you're unsure and you still don't know what we do, book a call and I'll walk you through every single thing we do on the back end so you can make the best decision moving forward with what you want to do. Without further ado, let's get stuck into today's video. So before we dive into the big five, let's look into the high-level thesis on why these 5 stocks are positioned for the AI boom coming up. The contracts are public and they are massive. Microsoft alone signed a $9.7 billion deal with one of the smallest companies on the list. CoreWeave is sitting on the revenue backlog of $99.4 billion. These are not hopes. These are signed, legally binding numbers. And the beauty around all of this is betting on infrastructure instead of applications. The chatbots and AI startups are a brutal winner-take-most lottery. 95% of contestants will be forgotten in the future, but every single one of them, winners and losers, has to rent the compute. They all have to pay the chip maker, the equipment, the cloud, and the landlord, whether their app succeeds or fails. Infrastructure is like owning all the lottery tickets at once. But there is one caveat and it governs everything. Every name in this video could fall 30 to 50% in a sector drawdown while long-term demand keeps growing right through it. Treat this more so as a map, not as a promise or a smooth journey going forward. So we're going to be looking at 5 different business models, but they all have different layers and stack differently in the industry. There's going to be 5 different areas or sub-niches to bet on. So it's up to you to decide which layer that you believe in the most. That is the one where you'll take the appropriate exposure to. So the first layer we're going to start with is the big dog themselves, Nvidia. They invented the only shovel that essentially works and patented it, and now sells it to every prospector on the continent at a 75% gross margin, meaning for every dollar you pay Nvidia, 75 cents is profit before costs. In the quarter ending April 2026, Nvidia posted record revenue of $81.6 billion, up 85% from a year earlier. Data center revenue alone hit $75.2 billion for the full fiscal year, $215.9 billion at around $211 a share. It carries a market cap of roughly $5.2 trillion. So why is it indispensable? Because Nvidia's advantage isn't just the chip. It's the software ecosystem they've built, a language the entire AI world has spent 15 years learning to speak. Switching away from Nvidia isn't like switching brands or gas. It's like switching languages mid-conversation. The CEO disclosed visibly into roughly $500 billion of next-generation chip revenue through to the end of 2026. That is the order book. That in itself is the expansion. That is the safest, most proven way I personally feel to own the AI build-out. Now, if we look at the bear case and the risks associated to this, first, you just got to look at the law of large numbers, right? When you're already doing $215 billion in revenue, maintaining an 80% growth, it gets mathematically harder every quarter. Every deceleration, even to a still spectacular 30%, disappoints a market that has priced in perfection. The second part of this is, well, we got to speak about China. Nvidia's guidance assumes essentially zero data center revenue from China due to export restrictions. The third is the customer concentration. A huge slice of revenue comes from just a handful of big cloud companies. If they pause spending, the most valuable company on earth feels it almost immediately. Nvidia is the anchor of the stack, the core holding, but it is not a savings account. Now, layer 2 is one of the most people have never actually heard of, and it might be one of the purest shovels of them all. Vertiv, ticker symbol VRT, make the physical guts that keep a data center alive. Uninterruptible power supplies, giant battery backups, switchgear, liquid cooling systems that keep Nvidia's chips from melting themselves into liquid. A GPU without power and cooling is a very expensive space heater. Vertiv sells the power and the cooling, and it doesn't care who wins the AI war. It sells the gear to all sides. The order book for them is screaming, and it will continue to demand supply. In Q4 2025, Vertiv's new orders were up 252% year over year. Its book-to-bill ratio hit 2.9, meaning for every dollar of product it shipped, it booked nearly $3 of new orders. The backlog they currently are looking at is $15 billion, up 109%. Q1 2026 earnings per share up 83%. 2026 revenue guidance raised to 13.5 to 14 billion. That is a 30% organic growth and 51% earnings growth. The stock is up around 87% year to date to roughly $303 and over 1,000% in 5 years. Now, the bear case for Vertiv, well, first, the valuation. At roughly 50 times forward earnings, any guidance missed punishes them hard. The stock fell about 18% in a single month recently, even amid the boom. The second part is Vertiv's Europe, Middle East, and Africa segment saw revenue fall about 20% year over year in Q1 2026. Management guided it to merely flat for the year. And the third part inside of this is just shared risk. See, Vertiv is a direct high better bet on hyperscaler capital spending. A genuine CapEx pause would hit its order book before almost any other name in this video. Vertiv is the elegant agnostic shovel, but it's a shovel priced for a permanent gold rush. Now, the third level is where it gets a bit spicy. CoreWeave buys mountains of Nvidia GPUs and rents them out by the hour to anyone who needs to train or run an AI model. Think AWS, except built from the ground up for AI workloads only. Q1 2026, $2.08 billion in revenue, up 112% year over year. Revenue backlog is $99.4 billion, up 50% in a single quarter. A company with roughly $8 billion of annual run rate revenue is sitting on a $100 billion backlog. 10 separate clients have each committed to spending at least $1 billion, and it joins the NASDAQ 100 on June 22nd. But this is by a wide margin one of the two riskiest names in this video. The losses are real, $740 million net loss in Q1 alone. The debt is also real. Corporate bonds at a punishing 9.625% interest rate, with 2026 capex guided at 31 to 35 billion. And the insider selling is real. The founders have sold over 2.5 billion of stock since the IPO. This is not a vote of confidence you'd love to see. CoreWeave is a thrilling, high-octane way to ride the compute shortage, and it is exactly the kind of leverage capital-hungry stock that gets cut in half first if the music starts to slow down. I'd be very, very cautious and size this as the risk it is. The fourth layer we move on to is CoreWeave's globe-trotting cousin with a wild, wild backstory. Nebius is a full-stack AI cloud company building large-scale GPU clusters, but where CoreWeave is heavily US-centric, Nebius is planted across the US, UK, and continental Europe. The backstory: Nebius was born from the international asset of the former Russian tech giant Yandex, reconstituted as a Western Amsterdam-based AI infrastructure company. And the growth is vertical. Q4 2025, revenue up 547% year over year. Core AI cloud up 830%. Exit rate at end of 2025, 1.2 billion annual run rate. 2026 guidance, 3 to 3.4 billion in revenue at roughly 40% adjusted EBITDA margin. That means for every dollar of revenue, 40 cents falls through to operating profit. It ended 2025 with 3.7 billion of cash, and it's also joining the NASDAQ 100 on June 22nd. Bank of America carries a $280 price target. But the risks associated to this: first, again, the valuation. At around $259, the stock trades at roughly 240 times earnings. Zero room for a stumble. The second is the capex. 226 capital spending guided to 16 to 20 billion, which it doesn't currently have in the bank. It depends on continuous access to friendly capital markets to fund the build they're currently scaling. A closed financing window is the specific nightmare for these guys. And also it's fighting Amazon and Google, who have effectively unlimited resources. Similar upside ceiling to CoreWeave, but also you need to understand there's a similar floor risk. So again, this is another one where I would be very, very cautious on what price I'm entering this in. The fifth and final layer for this video we have is IREN. Now this is the bottom of the stack, the layer almost every investor skips. And in my opinion, the most fascinating bet of the five. See, they are the landlord in this situation. Everything above this layer, the chips, the gear, the clouds, ultimately has to sit inside a building. It needs to be plugged into a grid. It needs to be drawing megawatts of electricity. And guess what? IREN owns that. It controls the scarcest resource in the entire AI economy, grid-connected power and the data centers built on top of it, then rents the finished product to the biggest names in technology. See, IREN started life as a Bitcoin miner, spent years quietly accumulating gigawatts of cheap grid-connected power because mining demanded it, and then discovered it was sitting on the most valuable real estate of the decade, acquired at fire sale prices. As of today, the stock is bouncing between $60 and $62, up roughly 500% over the past year. The validation for a company this size, around 21 billion in market cap, the smallest in this video, is pretty staggering. IREN signed a 9.7 billion contract with Microsoft in November 2025. That deal alone is nearly half of IREN's current market cap in contracted revenue. Then in May 2026, a 3.4 billion agreement with Nvidia itself, plus a 5 gigawatt strategic partnership, plus rights for Nvidia to buy up to 30 million IREN shares. The company that makes the chips at the top of this stack chose to rent from the landlord at the bottom and wanted equity upside in it. IREN now has 3.1 billion of annualized revenue under contract, targeting 3.7 billion by year end. And as of June 15th, 2026, it completed its acquisition of Spain's Nostrum Group, adding 490 megawatts and entering a third continent. So if we compare the numbers here, look at all the way to the right, we've got IREN at 21 billion. And then on the left, we've got Nvidia at 5.2 trillion, a company that just signed 13 billion in contracts with Microsoft and Nvidia. IREN is over there on the right-hand side. Is it priced for that relationship yet? That is the bet going forward. Now, the bear case associated to IREN, the sharpest of any name here. First, customer concentration. The bull case leans on two ways, Microsoft and Nvidia. Losing or failing to renew either would be devastating. The second is dilution. IREN raised over $6 billion in 2026 alone, including a fresh $2 billion convertible that knocked the stock down nearly 5% on announcement. Shareholders face ongoing dilution while the balance sheet is stretched tight. Third part of this, execution. This transformation is signed but not yet converted to cash. The single most important event to watch, the first Microsoft data center handover, targeted for Q3 of 2026. That is the moment paper contracts become real revenue. IREN is the highest upside, highest risk way to own the AI build-out. The pure bet that the company that owns the power owns the future. So the big question is, what do you do? With this information, there's 5 layers, like how do you size accordingly? Well, there's a few things we've labeled here to watch out for in each one of these on the right-hand column. The most dangerous investor is the one who only reads the bull case. Every one of these has a real risk sitting next to the bull fact. That is not a disclaimer. That in itself is just objective information. So this is on a complete risk spectrum of the entire sector. At the calm end, you've got Nvidia. Proven, profitable, and it could be the core holding in your AI exposure. In the middle, I would have Vertiv. It's got a real backlog, growth with earnings underneath it. At the wild end, CoreWeave, Nvidia, and IREN. These are leverage bets that can double or half on a single headline. If you're going to own these, hold these with conviction, not with your rent money. One more principle inside of this is it separates investors from gamblers. Watch the bottleneck, not the price. The tell that this trade is ending isn't a stock price. It's physical. Grid interconnection queues, the waiting list to connect new power starting to shrink, GPU lead times normalizing, hyperscalers letting capacity contracts expire. Check those conditions throughout the year. As long as the bottleneck holds, treat the 30% drawdowns as weather inside a climate. Now, at the end of this story, the AI gold rush rewards shovel sellers over prospectors. Nvidia and Vertiv are the foundation you build the position on. CoreWeave, Nebius, and IREN are the high conviction swings, sized so that if any single one falls 60%, you're not disappointed and you're also not destroyed. In saying all this, I'm a big fan of IREN and what they're currently doing and what could potentially be happening as the rollout at the back end of this year. But it's very, very important. There's a few contracts they should be tying up at the end of this year and they should be powering some stations on. If there's delays, if there's issues or problems or concerns in that, that'll be very, very important to note. And I'm sure the stock price is going to be affected if this happens. As always, this is not financial advice. Do your own research. This is another opinion, another viewpoint. Always look at every single video, every single piece of content you're researching objectively and make the best decision, the best exposure for you going forward. As always, I like to be optimistic, but I also like to look at things through the lens of a skeptic as well, because that is how we better understand the market and interpret the patterns going forward. As always, I'm making videos here every single day for you guys, so I'll see you in a video again tomorrow.